Welcome back to Squawk Box. We are in Aspen, Colorado this morning with two former Treasury secretaries who are the co-chairs of the Aspen Economic Group. Good morning to you. Hank Paulson is here. Tim Geithner is here. We just spoke to the president. Lots of questions about where our economy is today, what's going on with the tariffs, how you think about all this geopolitically, treasuries and everything, geopolitics, China. So I want to get to as much of this as we can. I just want to start, though, with where you think the economy actually is and how much you think the tariffs thus far are either impacting things or not, and just what your reaction is even to what the president was saying, given his real excitement about those tariffs and all of the money he says he's getting from all of these other countries.
So I think the economy, Andrew, you've got to start by saying our economy is amazingly resilient. Amazingly resilient. It's been the bright spot in the world since 2020. So just think about what we've been through. The financial crisis, multi-year pandemic, shifting economic policies. And yet, you know, if you go back to 2020, we've grown at 3 times the rate of the rest of the G7.
Right.
We've had output 40% higher than Germany, Canada, and so on. And we have got the strongest private sector. So I start there. Then in terms of what's going on with the economy, tariffs, et cetera, let me tell you, it's going to take a while to determine that. It looks like things have slowed down a lot, okay, in terms of manufacturing jobs and in terms of job creation. But there's so much going on, right? Look at everything that's going on right now. It is amazing, and it's going to take a while to work its way through the system. So we've got, as you've said, we've got tariffs, we've got tax cuts, we've got the impact of AI. That's going to take a while for us to determine.
Where do you land on tariffs?
I mean, tariffs are a bad tax. They're like a corrosive tax on American manufacturers. They're aggressive in their impact. And we don't know where they're going to settle out yet. You still don't have, you know, where China's going to settle out, where India's going to settle out. You know what the relative changes are going to be. So you don't know yet what the broad impact on supply chains is going to be. But it's a shock. It's a hit that the U.S. economy can withstand.
Do you think the market...
It'll be meaningful, but not enough to break this pretty strong economy. We're an economy that's very hard to break, and we've got a whole bunch of things happening in the American economy that are a source of strong investment demand, innovation, and things like that. And so it'll be hard, Hank's right, it'll be hard to figure out, hard to see the ultimate effect until we see where they settle out. But, you know, it's like rust, it's corrosive, hard to reverse, and the effects accumulate.
And you say accumulate and are corrosive in what way?
Because they raise the costs of inputs to manufacturers, and they are a hit to real incomes of the average American. And, you know, they have that basic effect. You can't escape. And the long-term challenge for us, of course, is, yeah, they will raise revenue. You don't know how much revenue they're going to raise. And, you know, we're a country living on the future, borrowing from the future, huge, unsustainable long-term deficits. And that revenue is going to prove to be a very valuable thing in our political system as we get through this, and hard for people to give that up. So, you know, most people would say it's a bad form of tax, even though they know taxes need to go up. And it's going to be hard to get the political system to figure out a way to clean up and reform that legacy of tariffs, because they're going to find that revenue so attractive.
Do you believe the market thinks the tariffs are really here or not? I mean, do you think it's baked into what the market actually thinks, Hank?
Yeah. Who knows what the market thinks? But I will tell you, there's no real permanence to it, right? Because they could change tomorrow. The administration could change them. Our counterparties could. So there's not a real permanence. The thing that I dislike the most about tariffs are, I don't like to prop up inefficient industries, right? We saw that in the 70s when we had tariffs that protected our auto industry, and it really fell way behind. I don't like it when they prop up companies of the past, and hold back companies of the future. But as Tim said, they raise a lot of revenue, right? And I think it's worth really studying the impact of that. Now, I think the thing that I dislike the most is that they're uneven, right? And so they're uneven. They punish some. They benefit other. I'm talking about within the U.S. economy, and so they create distortions which have an adverse impact and can have an adverse impact.